I've crafted a strategy that's designed for all traders. The beauty of it is its simplicity. It doesn't require any complex knowledge to trade with it. Alongside demonstrating this amazing strategy, I'll also share the backtesting results to prove its profitability. Backtesting is a must for every trader, and I recommend trying out the efficient and user-friendly TraderEdge platform for this task. TraderEdge is the go-to tool for fast and convenient backtesting. Simply set your initial account size and profit and loss per trade, and let TraderEdge provide with you essential data about your strategies, including win ratio, profit or loss, and drawdown. You can save your results in the platform's strategy library for future reference. TraderEdge offers additional features like a position size calculator for forex and community traders, a profit or loss calendar to track performance, and a library of proven indicators and strategies. If you're new to backtesting, don't worry. Signing up for TraderEdge gets you a free step-by-step backtesting guide and a comprehensive course on building profitable mechanical trading strategies. Additionally, you'll receive 4 pre-made high-quality strategies for free when you sign up right now, but only if you act quickly. Okay, now let's get on with the strategy and add the 200 EMA filter parabolic SAR indicator to the chart. After that, let's make some adjustments just like I do. After that, you need to add the trend trigger factor indicator by Lazy Bear. Once that's done, there are a few adjustments that you need to make in the settings. So, if you're looking to trade using this strategy, there are a few conditions you need to meet. For a long trade, you should first wait for a long signal from the EMA 200 filter parabolic SAR indicator. Next, you'll need to ensure that the trend is upward, meaning the price is above the 200 moving average. For final confirmation, you should check the TTF indicator. Now, we can consider long positions as confirmed if the TTF indicator is in the area between level 0 and level 100. If the TTF indicator line is above or below this area, the signal is not confirmed. So, if all these conditions are met, you can now enter a long trade. Then, for risk management, place your stop loss under the recent swing low. The best target for this strategy is to use a risk-reward ratio of 1 to 1.5. And to initiate a short trade, you first need to look for a short signal from the EMA 200 filtered parabolic SIR indicator. Following this, it's crucial to verify that the trend is downward, which means the price is below the 200 moving average. And now the TTF indicator should be checked for final validation. You can only label short positions as validated if the TTF indicator is situated between level 0 and level -100. If the TTF line falls outside of this range, the signal isn't validated. So, once all these prerequisites are fulfilled, you're ready to enter a short trade. For managing risk, position your stop loss above the recent swing high. Then aim for the risk-reward ratio of 1 to 1.5 for the optimal target for this strategy. Now it's time to backtest our strategy and ensure its performance. For the backtest on the Trader Edge website, we set the initial amount at $100 and consider the risk-reward ratio of 1 to 1.5. After executing 100 trades on the Ethereum chart in a 5-minute time frame, the win rate of the strategy reached 61%, resulting in a 175% profit. The profit factor of this strategy was 2.35. In this backtest, we had 8 consecutive wins and 4 consecutive losses. But if you're interested in learning a method that could potentially multiply your trading profits, you definitely don't want to miss out on this recommended video.